आज मैं आपको एक स्ट्रैटेजी बताने वाला हूँ।
I'm just going to share one strategy today.
इतनी आसान स्ट्रेटजी सिखाने जा रहा हूँ.
It is about a simple swing trading strategy.
10 EMS strategy.
Every trader is running behind that one perfect strategy. They try to learn multiple strategies from here and there in the hope of making good profits in the market. But do you know the stats? Every time you open any broker's dashboard, it is visible right there. 90% of traders lose money in the market. And out of anyone who generates a profit also, a lot of money is eaten up by charges. So welcome to a video in the trading series here by marketfeed. This is Ajay Ajit. Let's get started. So first, let's get to the case of a learning trader or currently a loss-making trader. What most people don't understand is that loss is not linear. That means let's quickly look into this table, right? Suppose you're starting with a capital of 1 lakh rupees and from there you make a loss of 10% on your entire capital. What does your capital become then? It would become 90,000 rupees, and from there, if you want to get back to the initial capital of 1 lakh rupees, you'll have to make a profit of 11%. And it gets worse the more and more losses you get into. So in this case, if you're a trader who made 50% loss, you'll have to make 100% of your capital back just to get back into the initial capital of 1 lakh rupees. So what happens here? Any trader who starts making a loss in the market, they'll get more and more aggressive and they'll end up blowing their capital. And that's what I want everyone to avoid. Nobody should be blowing their capital in the stock market, be it a learner or even an advanced trader. And this is not just a case for a bad trader. Suppose you're a good trader who's making good profits consistently in the market and you start with a capital of 1 lakh rupees once again. And from there you make a profit of 10%. So overall your portfolio is up 10%. From there you make a loss of 10% from that level. What do you think will be your capital after this scenario? So I know a lot of you would assume that you made 10% profit, from there you made 10% loss, and hey, we're back to the same starting capital. But this is not what happens. With the same logic that we had earlier, if you start with that same capital of 1 lakh rupees, you make a 10% profit, get back into a 10% loss, you'll be only left with a capital of 99,000 rupees. That means even without thinking about the charges, once again you'll end up in a loss. So here a bad trader who is consistently going to lose money because he'll be more and more aggressive. Here a good trader, but without this one secret trick, he might also end up in losses without him knowing. So here we have to get to a solution, right? A lot of traders in the market are making genuine money. There are really good traders who are following this one simple rule. But just because it is not glamorous, it is not a cool thing to say, many are not talking about it. So here is where the concept of position sizing comes in. Position sizing is nothing but predetermining your capital that you're going to deploy into a trade, or the quantity or the number of stocks that you're going to buy in a trade, so that your risk is completely limited. So for a loss-making trader, his losses are limited, and for a profit-making trader, his profits will be maximized. So without further ado, let's get right into that with this calculator that I have built for you. Here is an intraday position sizing calculator that I want to show you. We'll start off with that, then we'll get to the swing trading calculator as well. So when we're getting into the intraday position sizing calculator, only a few questions are asked here. What is your initial capital? What is the percentage risk of account that you want to take? And what is the entry and SL price for the trade which you're planning to take? And without saying, you should be knowing that every trade that you enter into should have a plan, and it should have a proper entry and proper exit in your mind. So let's take this first example itself. Suppose you're starting with a capital of 1 lakh rupees. Your ideal risk of account, in my opinion, should not be higher than 2% in any trade. And you're trying to buy an option, or you're trying to buy a intraday stock for a price of 250 rupees and your SL price is 210 rupees. Now, what would happen if you deployed your entire capital into this trade? You would be buying nearly 400 quantities into this trade. And if you end up in a loss in this trade, if this trade hits your SL, a strict SL as you had planned, which is 210 rupees, you would have lost 400 quantity into 40 points, which is nearly 16,000 rupees, which is 16% of your entire capital. So then it goes back to the loop. To make back all this capital, you'll have to generate out of the world returns, and you'll keep on ending in this loop. You'll go into bigger and bigger drawdowns. You'll find it harder and harder to get back into the initial capital range. So what is this calculator telling you? It is telling you that if you're someone with a capital of this, and if you're entering at 250 and your SL is 210, do not go ahead and buy 400 quantities. Just go ahead and buy 50 quantities. So in Nifty, if you're an options trader, if you're a buyer, right, the quantity would be one lot which you can buy in Nifty. Bank Nifty, it should be 3 lots, and in Fin Nifty, it should be the same as Nifty, which is 1 lot. So here what is happening? You're intelligently position sizing so that even if this loss hits your account, you still will have a good chunk of capital to resume your trading in. And even if you hit your SL at this 40-point big SL that you have set for yourself, even if this stock, even if this trade goes to hit an SL, you will still only risk 2% of your entire account. That is just 2,000 rupees. I'll even show you a case where a hero and zero trade is what you want to take in options. Suppose you're going for a hero or zero trade in the market and your capital is 1 lakh rupees, and once again your percentage risk of account should not exceed 2%. You can even reduce it if you want to. And your entry price, because it's a hero or zero trade, it's around 10 rupees, and the SL, let's keep it at 1 rupees. So here again, the number of lots you should buy in Nifty is limited to 4. No matter what happens, even if you have full confidence that this trade is going to double, triple, or even quadruple from here, because you know the risk, because it is a hero or zero trade, you should not be buying more than 4 lots in Nifty and 14 lots in Bank Nifty. So hope the concept is clear. You'll be reducing your capital in such a way that your entire quantity which you're going to buy will be lowered, and hence your potential losses are limited. And don't worry about the profits. If you're consistently doing this, you'll end up in good profits anyway. And this one single calculator and this entire concept of position sizing will also kill the greed in you. Oftentimes you hear this, don't risk your account. Your risk is what you have to be managed to be successful in trading. Then you also hear, don't be greedy in the market. And then what should you do? What is the outcome? The outcome is this calculator and the calculations that go behind it. It is position sizing. Now I want to show you the swing trading calculator, swing position sizing calculator as well. Here you'll be seeing an extra logic here, which is number of trades. Suppose you're starting with an entire starting capital of 1 lakh rupees, and from here you are trying to take 5 different swing trades at the same time. And again, in my logic, you should not be risking more than 2% of your capital in any trade in the whole of the stock market. And in this case, take the same example, you're entering a stock for 250 rupees, you're exiting, your SL is at 210 rupees. So even here, you'll only be deploying nearly 12,500 rupees into that trade. That is nearly 50 quantity that you should be buying. And the added logic here is that even if you're setting an SL price of just 10 points, even in that case, you would not be deploying more than 1/5 of your capital into this trade. You need diversification as well to win in swing trading in the stock market. Every single successful person that I've seen in the market, be it an option buyer, an option seller, an intraday player, or even a swing trader, they always use these rules very religiously, because they'll never break this rule. The moment they break this rule, they'll go into bigger and bigger losses. So again, a very simple concept, the concept of position sizing, something that a lot of people will not tell you. You have a lot of strategies. You might have good strategies in your hand. Apply it along with position sizing and keep a buffer for losses and drawdowns also in the market, because that's how the market works. You have to accept it. And I'll guarantee you this. With this one simple calculator, you'll surely end up making good returns in the long term. So hope that this very short and sweet video was helpful for you. I'll link the calculators down in the description and in the pinned comment so that you can go and check it out yourself. You can use it to your heart's liking, and at one point in your trading career, you'll not even need this calculator to carry on with your daily trades. This will get ingrained in your mind. And once you start thinking like that, you'll start becoming a pro trader by yourself. If you like this video, make sure you hit the like button so that YouTube gods are happy, and make sure you're subscribed to the channel for more such informative videos. This is Ajay signing off. See you all again. Bye bye.